Peter Schiff, CEO, Chief Strategist at Europac Capital, joins us from Singapore, where they have a big mining congress going on. Peter, welcome to the show.
Thanks for having me.
Tell me about
Pacific Capital is a company.
Euro Pacific Capital. Tell me about silver. Have you been tracking silver? Are you convinced about the arguments that silver is going to be the next big precious metals bet and it could go back to where it was when the Hunt brothers were trying to corner the market?
Well, we've been more than just tracking it. We've been owning it and buying it for our clients for years. And yeah, I'm convinced that this is a real bull market in metals, silver, gold, and it's really a reflection of inflation. It's a reflection of a loss of confidence in fiat currencies and paper assets. That's why, you're seeing bond prices across the U.S. and here in Asia dropping sharply. It's inflation that is driving metals higher and driving bonds lower.
So where is this? Well, wait a minute. Let's. We regularly visit the different dynamics in metals markets. Sometimes it's a foreign exchange or dollar proxy because of dollar pricing for most of these precious classes of metals. But if we're in an inflationary environment, but if corporate earnings are outpacing any inflation pressures in the economy, doesn't it behoove people to get into high growth stocks rather than an asset class like gold, which doesn't pay interest and which you have holding costs on?
Well, I don't think that corporate earnings are outpacing inflation. Also, stock price. If you look at the Dow Jones, year to date, the Dow Jones is down about 7% priced in gold. The public is being confused by pricing their assets and depreciating paper currencies. But that's an illusion. It creates a distorted view of reality. I think that people are far better off preserving their purchasing power in something like gold, which is in short supply, and not paper currencies, which are being printed in abundance.
Well, since we're showing gold right now, let's talk about that. You have said, I think, depending on which company you talk to, I think the latest bull call is $2,000 an ounce for gold, from 500 something right now. Is that a pie in the sky dream, or do the dynamic trends indicate to you that that is a distinct possibility?
It is not only a distinct possibility, it is a high likelihood. In fact, I think gold ultimately can go a lot higher than $2,000 an ounce because the dollar is being debased, and I think there's no limit to how far the U.S. dollar can drop. I'm a little bit, I'm not really sure how high gold prices might go in terms of other currencies like the yen or the euro, the Swiss franc, the renminbi, but certainly in terms of the U.S. dollar, gold prices are going dramatically higher than $2,000 over the years to come.
Now you say the dollar is being debased, but the reality is the Armageddon situation of central banks tossing out U.S. dollar-denominated assets has not really happened. They do continue to buy at Treasury auctions. Isn't that argument a little bit flat?
No, it's kind of like the argument you jump off the top of a 100-story building, and just because you haven't hit the ground yet, that you're safe. Sure, central banks are accumulating dollars. This week we found out that China now has over $850 billion in foreign reserves. And, America's biggest export to Asia right now is inflation. We debase our currency, and Asian central banks buy dollars to prevent the dollar from collapsing, but they're not going to do that indefinitely. And the longer they do that, the bigger the problem gets, because we are running bigger current account deficits now, not smaller current account deficits. Our savings rate is dropping further into negative. Our government budget deficits are increasing, and at some point, foreign central banks are going to say enough is enough. There's a limit to how much good money they're going to throw after bad.
And Peter, finally, this whole mining summit taking place in Singapore this week, your job is not to mine. Your job is to dig out jewels, needles in the haystack opportunities for you and your investors. You want to drop a few names, drop a few industries? What's catching your eye?
Well, I just showed up, so I haven't even attended the conference yet, but I'm hoping to find some good junior mining companies out here in Asia. Generally what I've recommended for our clients at Euro Pacific Capital has been very conservative non-US dollar dividend paying assets, but for the aggressive clients, we're very bullish on mining shares, precious metals companies, and in fact, I think if you look at the way the major companies like the Newmont Minings and the Barrick Golds have underperformed some of the other junior miners recently, and in fact gold is almost at a new high, yet the XAU index is considerably below the highs it posted in January. I think it really shows the skepticism by which Wall Street still views this precious metals rally, and I think we have
Peter,
a long way to go.
Peter, you have a great time there and dig out some gems. Okay, Peter Schiff, Euro Pacific Capital. We'll be back with a wrap on Live next.